Crowdstrike reported fiscal year 2024 first quarter earnings results. So in this video, I was going to analyze those results from those earnings report and also update my buy recommendation for Crowdstrike stock. Before the earnings came out, I had Crowdstrike stock rated as a buy. So let's see if there was anything in these financial figures that has me changing my buy recommendation for Crowdstrike stock. So let's get started. Revenue increased by 42% to 693 million. Net income improved to 500,000. This was an improvement from a loss of 31.5 million in the same quarter last year. Although this was largely only due to interest income of 30.5 million in this year's quarter compared with just 1.5 million in last year's quarter. Now, interest rates have gone up substantially in the last year, and that benefited Crowdstrike, which has $2.8 billion of cash on hand. But I kind of downplayed these results because interest rates always fluctuate, and it's not a dependable source of revenue and profits for a business. I'd prefer a business boosting its profitability from operations and not from changing interest rates. That's why I put an asterisk on that improvement in earnings per share for Crowdstrike in this current quarter. Deferred revenue increased slightly to $2.4 billion. This is revenue, this is contracts that the company has locked in, and it will record them as revenue once it performs these obligations. I mentioned earlier, Crowdstrike has 2.8 billion in cash and only 741 million in debt, so it's got an excellent balance sheet right now. Cash flow from operations improved to 301 million. That was up from 215 million in the same quarter the prior year. So very nice growth in cash flow from operations. I would have liked to have seen similar growth in profitability because the company improved revenue by 42%. And if you exclude the interest income gain, its net profit hardly would have changed year over year. I would have liked to have seen more improvement in profitability as a result to that nice increase in revenue. The company's forecasting second quarter revenue of 722 million, which would be a nice incremental increase from the first quarter, and it's forecasting full year revenue of 3 billion. Now, to put that figure into context, in 2024, Crowdstrike delivered 2.24 billion in revenue. So another year of decelerating revenue growth for Crowdstrike, which if you look back the last 5 years or so, Crowdstrike's revenue growth has been decelerating each and every single year, getting slower and slower and slower and slower, while it's showing very little improvement in terms of profitability. It is showing improvement in cash flow from operations. The big difference between profitability and cash flow from operations is stock-based compensation, which the company has been using considerably. And since it's a non-cash expense, it helps the company improve its cash flow from operations, but it hurts the company's profitability because it needs to account for that on the income statement. So, going forward, Crowdstrike has excellent prospects, right? Cybersecurity is becoming more of a must-have instead of a nice-to-have for enterprises worldwide, and more of our time is going to be spent online, and the need for cybersecurity is only going to increase over the next at least 10 years, I would say, maybe even 2 decades. So it's got excellent long-term growth prospects. To answer the question I posed at the beginning of the video, I still recommend Crowdstrike stock as a buy. I didn't see anything in this quarter that would have me downgrade or upgrade my recommendation. I just have it as a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.